All right, lesson for today. I will have all of your tests and I will go over those results on Tuesday when we have class. But just kind of giving you the intro to this section. We are going to have a packet to work with. I will hand those out on Monday. I'm not too concerned with them today. Today, my main goal is going to cover um, what kind of the income tax, the deal with the tax, and then also um, kind of some of those terms that you're going to see. So, um, first thing as I'm going to start talking is going to be wages, tips, other compensation. So, when we're talking about the total amount of money that you're going to come in uh, when dealing with taxes, they're going to ask kind of a lot of need a lot of information based on kind of the background of where your money's coming from, what sort of money is going in, what sort of money is going out. So, a lot of times for all of the income itself, wages, tips, and other compensation, kind of as they describe it on a W 2, that's going to be the total amount of money that is paid prior to taxes or any other withholdings. So when they say that you're going to get a paycheck, that is going to be the total amount of money that you're going to be bringing in. As anyone who's had a job or seen something like that, you know that the amount of money they say that you're going to get per hour really isn't what you end up with in your pocket because you're going to be paying taxes, you're going to be paying a lot of other stuff. Um, but again, those wages, tips, other compensation, that's going to be the amount of money that you would be receiving if you did not have to worry about any of those other taxes, fees, stuff like that. All right, next one is going to be the AGI or adjusted gross income. When we start talking about the adjusted gross income, that is the amount of money that you are going to make after you remove any additional taxes, any additional fees, other kind of payments that you're going to be making uh, that you can kind of deduct away from how much money you actually took in. So again, let's say you have a paycheck from work. I'm going to use simple numbers, easy numbers, and say you get paid $10 an hour. Okay. Um, as you probably have seen, you don't get paid that actual amount. So when we start talking the adjusted gross income, let's say you get, $2, maybe $3 taken out for Social Security, all this other stuff. Um, the adjusted gross income is going to be what's left off after all those taxes get taken out and those other fees get taken out. So your adjusted gross income might be closer to, let's say, $7 an hour after you have all of that money taken out. So that's what the adjusted gross income is. And again, we'll talk a lot more about that a little bit later on. Next one is going to be the standard deductions. When we're talking about taxes and when we pay the taxes, the standard deduction is going to be a set amount each person can take away from their income without having to show proof of purchase. You don't have to show any receipts. You don't have to itemize all of your things. They're just going to say the expectation is that a person that is living in America, kind of making what you make, the expectation is that you will pay this set amount of money every single year. And so they just kind of give you a ballpark number. So that way you don't have to worry about all the headaches and all the trying to figure out, did I spend this much here? Did I spend this much here? So that's what standard deductions are. Now, when we start talking about itemized deductions, those are going to be items that you can remove from your pre-taxed income. So, like stuff like your house payments, if you have business expenses. So, let's say you are driving to and from work from a long ways away. That money that you're paying in gas specifically for you to get to work, if you had the receipts for every single one of those would be considered a business expense because you need to get there, where those things could be deducted. Um, but most of the time, people aren't going to hold on to every single receipt. So that's sometimes why people will stick more with that standard deduction instead of the itemized. Because if you are itemizing things, the expectation is that you will have a paper trail, some receipts, some things that show that is the stuff that you actually paid for that entire time. Um, So when I start talking those two deductions, the standard deduction and the itemized deduction, you only get to choose one of them. You can't do both of them. You can't take the standard deduction and then also include different receipts and stuff like that. It's just kind of one or the other. And as you go through some of your different tax type things, you'll be able to figure out which one is going to be kind of the better deal for you, which one is going to add up and give you the best chance, the best discount that you can work with. Okay. So when we're talking about those taxes that you're turning in, um, so the refund, that's going to be the amount of money that you're actually going to get back from taxes, or a lot of times it's going to be the amount of money that you've paid in extra throughout the year, and you're able to get the money that you have overpaid um, into kind of those taxes as your year has gone on. So uh, the next part, I'm going to start talking kind of the W-2s, W-4s, and then claiming things. And the claiming will hopefully make a little bit of sense. So kind of ignore the claim for right now. I'm going to come back to it, I promise. I promise. All right. So the first one is going to be like when you first get a job. When you first get a job, and they're going to start asking you questions um, about your name. You need to have all your information so that way they can pay you and they can properly address those things. They're going to figure out what your name is, what your address is, all the um, personnel type stuff. The other part they will ask is they are going to ask about your withholding certificate. So what we're going to work on, what I'll kind of work on today, is that I'm going to show you how all of these taxes are going to get added up together without using the fancy charts, without using all the fun stuff. But no matter what, there is going to be, or should be, a certain amount of money that is going to go towards taxes that you won't be able to get back, and I'll show you those ones. But instead of you having to pay a big check at the end of every year, what they do with that W-4 is that they will say, all right, I expect that I'm going to have to pay so much in taxes. So how much money do I want to set aside to make sure I'm not stuck with a giant bill at the end of the year? Because I don't know about you guys, but I'm sure that if I had money in my pocket or in my bank account and it looked like it was free and I didn't have to worry about it, um, I may not be trying to save, a couple, maybe $100, $1,000, sitting there waiting just to pay my taxes at the end of the year. If I see the money inside that bank account, more than likely it'll get used up for something somewhere along the line. Okay, so that's the W-4. And so now I'm going to go back up to this spot. So again, that claim on that W-4 is going to be what you're going to take out for taxes, how much you're going to take out throughout the year, so you're not stuck with just a big bill at the end, and be forced to kind of pay that one. Because here's the deal: the government usually gets their money, and so no one way or another, you'll have to pay it. That's where that trying to claim it throughout the year makes it a little bit easier, so you don't have to deal with the headache of trying to come up with all that money at the end of the year at tax time just to pay the government back. All right, and then the next part, okay, the kind of the part that most of you guys are seeing right now when it is coming up on tax time is you're going to get W-2s. Okay, that's going to be called your wage and tax statement. So what's going to happen with a W-2 is that is when your employer is going to have every single dollar you made throughout the entire year, and they're going to kind of itemize that out for you. And I'll have some of these ones for you. We'll kind of look at these ones a little bit later, but with that wage and tax statement, that W-2, it'll go through. It'll say your wages, tips, and your compensation. So how much money you made. If you are paid hourly, if you are, let's say, a server or something else like that, you have to claim how much money you get in tips. So that money actually needs to get reported out. So saying that that is how much money you brought in, so that way the government can get their money back. And then any other compensation. So let's say you might work on a commission or something like that. That will be where those other compensation comes from. All right. The other things that will be on that W 2, you will have a spot where it says your federal income tax withheld. So, how much money, when you did that W 4, did you say that you want to put aside, or kind of what percent was put aside? So, it will give you a dollar amount, dollar and cent amount of how much federal income tax was withheld for you. Social Security wages, they're going to say kind of how much money did you make, so that way they can account for that when it comes to Social Security type things. And then there'll be another portion that will say how much Social Security tax was withheld. All right. On to, there'll be some Medicare wages and tips, trying to say how much money you made for taxable purposes for Medicare. And then there'll also be a spot that says the medical or the Medicare tax that's been withheld. So all that sort of stuff is going to kind of go together. And that's on that W-2 on the right-hand side. That's where what those numbers are going to mean. Usually along the bottom of your W-2, kind of that block 15, it will show you kind of, again, what your wages were, how much money you made, and then it'll also show you how much money you set aside for like your state income tax. Okay. So I will work on showing you some of those ones, but that is kind of all the or the words, the terms that we're going to use. All right. Let me get this next part out. I do want to show you your sheet. You guys should all have that sheet. Actually, I'll scroll down. I'll kind of make a new portion for you. Get out your sheets that have all those formulas on it. And I'm going to kind of show you how that tax rate on that back page actually works for all this. So hopefully you have your sheet in front of you. If not, there are some inside the basket hanging up on the podium in the front. But on the back, they have some things that say tax rate. Gives you a whole bunch of numbers. It's the 10%, 12%, 22, 24, 32, 35, 37. And then it also has kind of the standard deduction on the bottom. And then across the top, it has one that says single. If you're married and filing separately, married and filing jointly, and then a head of household. So I'm going to kind of explain all this stuff that's on that sheet. Hopefully it's going to make some sense. If you are single, okay, which most of you are, okay, even if you are in a committed relationship, it still doesn't count as any other taxable category currently. So when you're single, you'll probably be looking at the very first column. If you're married, filing separately, so kind of later on, they're going to kind of make these different brackets so that way they can realistically figure out where that money is at and how much money you should be like expected to pay for those ones. So the married kind of makes sense. The head of household is usually if there are a bunch of people living in that house and you are the one that is providing for those people. So if you're living with some other, let's say, siblings, and you're the one that is in charge, or like your parent, like you have one specific parent and you might have some extra family members living in that house, that is where the head of household is going to kind of be stepping in. All right, so on to the single. I'm just going to look at that one, and we're just going to pretend we're going to make up a certain amount of money and say we're making bank right now. We'll say that we make $50,000. Okay. And this is all going to be the AGI. Okay. The adjusted gross income is AGI, meaning after we took in all the amount of money and we took away our deductions, we're going to say that the net amount of money we brought in was going to be $50,000. Okay. So looking at that sheet, I hope you guys can kind of see it, but it says, and we're only looking at the single column, just making it real simple to start off with. Okay, so if you're in the single column, it says the 10% rate, it says up to $9,950. And then there's the 12% rate where it says from 9951 through 40525. And then the 22% rate was from 40526 to 86,375. Okay. So it seems really confusing, and I completely understand where it seems goofy like this. Okay. So when we have these tax rates, and you probably heard people talk about them, but they really don't explain it all that well, is that no matter what, if you make that 9,000 or the first $9,950 you make, 10% of that amount of money is going to be taxed at 10 or yeah, sorry. That amount of money is going to be taxed at 10%. Okay. And then for whatever you make after that 9,951 through that 40,525, whatever you make in that range, so that chunk of money is going to be taxed at 12%. Okay. And then whatever else you have after the, after that 40 to 86,000, that's going to be taxed at 22%. So if we're looking at this, we're single, we got $50,000 that we made. Let me change over to a different color pen so I can kind of show you the stuff that's happening. All right, our very first $9,950. Okay, so I got 9,950. All of that is going to be taxed at 10%, meaning I'm going to pay, no matter what, I'm going to pay $995 because I'm going to show you exactly what I did. I took that $9,950 times that 10%, and that's going to be this $995 is what I'm going to pay for, for that first 10% tax bracket. Okay, I did make over $50,000. So this is kind of the upper limit. So I did make over that. So I'm going to have to pay, again, all of this one and then all of this chunk. So what I'm going to do, and it's going to seem kind of weird, and I completely get it, is that I'm going to subtract this 40,525 minus the 9,951, meaning there's going to be $30,000 and 574, or yeah, 30,574. All of that amount of money, because again, it's going to be the difference, all the money that's inside that tax bracket and that chunk, all of that is going to be multiplied by 0.12. So all of that is going to get multiplied by 12%. So for this next chunk of money, this next tax bracket, I've got 3,668.88. Okay. And then I'm on to that last chunk. Okay. So I'm going to show you the steps I'm doing here. We made $50,000, right? Yeah, we did. Okay. We made $50,000 and we're going to go down to the lower end of this. So I've got 50,000 minus 40526. So I've got $50,000 minus 40526 because that's kind of where that break is at. And that's telling me that I have $9,474 that I'm going to have to pay the government, the tax rate, that's going to be at this 22%. So I've got, this was the difference between the total amount of money I made, that 50,000, and then the lower limit of that tax bracket. So I subtract the two of them and I find this number. Okay, the $9,474. I'm going to multiply that amount of money times 0.22. Okay, so I've got 9,474 times 0.22. And that tells me at this tax bracket, in this spot, I'm going to have to pay $2,084.28. Okay? To find the total amount of money that I have to pay, I'm going to have to pay, let me get a highlighter here just to show you what I'm doing. I'm going to have to pay all of this. I'm going to have to pay all of this, and I'm going to have to pay all of this. What I'm doing is I'm going to add every single number together. So I've got the $995 plus the $3,668.88 plus the $2,084.28. The total tax bill, if I made $50,000 after my adjusted gross income, I'm going to have to pay the bank $6,748.16. Okay, so if you didn't have, like on that W-4, if you didn't have them automatically take out money from your bank account, or sorry, from your paychecks, and kind of set some of that stuff aside, come April 15th, when taxes are due, the expectation is that you would have to pay $6,748.16. Okay, so that is where kind of all those taxes come from. If let's say you paid more than that, if let's say throughout the whole year you paid $7,000 or $7,000 was deducted from your checks in on that W-4 with the claim, then you'd be able to get a refund. You'd get, right at $252 almost. That's what you would get for a refund. If you paid under that, you'd have to pay until you reach that $6,748.16 for a kind of where that tax fund is at. Okay, so I'm going to go on to kind of do that same thing again. I'm going to show you a little bit, a kind of one that's a little bit closer to, let's say, how much money you are going to make. Okay. Let's pretend as you guys are working, if you have a job, if you're taking some, working hard over the summer, getting a whole bunch of money, and then again, you have some stuff during the year. Let's pretend you make $15,000. Okay. I'm going to go with a huge number here. I understand. But this is going to be how much money you make. Okay, so on that, W-2 that you had where it says the wages, tips, and other compensation, we're going to say it's an even $15,000. Looking at that sheet that you guys have, on the very bottom where it says you're single, okay? After all those tax rates, there's one that says the standard deduction, okay? Instead of having to pull out receipts and everything else, the expectation is as a single person, okay, you would be paying $12,550 roughly just on random stuff that you have to do in order to survive. Okay, like food, just basic things for you to live. So here's going to be our kind of that block one, the wages, tips, and other compensation. When we look to find our adjusted gross income, I'm going to say our AGI, we're going to take the money made minus our standard deduction, and that's going to be $12,500. That tells me at the end of that year, at the end of that year, after you got all that stuff out, after we take away all the money that you should have made, minus that standard deduction, your realistic adjusted gross income, the amount of money you actually made without having to pay all those other expenses that go along the way, is really only $2,500. Okay, so with that $2,500, I want you to look at that tax rate sheet, that chart that's on the back. Hopefully you can figure out which tax rate you're going to fall into, because the amount of money you made is right at the $2,500. You're only going to be in that 10% tax rate. So you don't have two different brackets to try to navigate. You don't have a lot of stuff that you have to try to jump through to make it work. So on this one, you're going to take your $2,500. It's all going to be at that 10% tax rate. You don't have anything that's going to be in the 12% tax rate. So you don't have to worry about that. I'm going to take all 2,500 times 0.10 or 0.1. And that tells me that the amount of money you're going to have to pay in taxes this year is going to be $250. Anything more than that you paid in on your W-2, you should be able to get back. Okay. All right. We're going to go on to one more sample problem, and then, then that'll be it for the day. So the next sample problem I'm going to do, we're going to pretend that I'm married. Okay. We're going to say we're married. And for whatever reason, I've got this sweet job. I'm going to make $650,000. Again, I'm just using super easy numbers to work with. I'm going to make $650,000, and that's going to be what my wages, tips, and other compensation actually is. So, what I need to find out for this problem is going to be how much money I'm actually going to need to pay in taxes for the year. All right. So first thing I need to do, so this is my total compensation up here. I need to find my adjusted gross income. Okay. So to find my adjusted gross income, I'm going to take the total amount of money that I made, and I'm going to look for my standard deduction. My standard deduction for being married and filing jointly, so between myself and my wife, the money we make together, putting it all together, my standard deduction is going to be $25,100. Okay, and I do want to let you know the tax rates I'm using were the 2021 tax rates. They actually have changed since I put this sheet together for you. However, I didn't update all those numbers because I already printed out the pages for you guys. Anyway, so adjusted gross income, I'm taking that $650,000. I'm going to subtract my $25,100, and my adjusted gross income is going to be $624,900. Okay. Just for the sake of this lesson, I am going to put together that the tax chart for you. Okay. So it's going to look kind of like this. I've got my 10%. I've got my 12%. I've got my 22%. I've got a 24%, 32%, 35%, and then a 37%. Again, a lot of stuff is going on here. So we're married, just to kind of throw that one out there. We're married and we're filing jointly. Okay, married and filing jointly. So I'm going to look at that tax rate. Again, the total number I'm going to be working to get towards is going to be $624,900. So my 10% rate, so my first $19,900, I'm going to say up to, is going to be at that $19,990. Okay. My next one is going to be from $19,901 through $81,050. The next one is going to be $81,050. 51 through 172750. And then my next one is going to be 172751 through 329850. My next one, 329851 through 418850. And then I've got 418851 through 628,300. And then the 37% is anything more than $628,000. 301. Okay, anything from there and up. So again, when people start saying that taxes are complicated, the way that they're calculating this stuff is completely is going to be complicated, especially when you get in these higher tax brackets. Okay, so I'm going to kind of write down all the steps of what we're doing just to show all those steps as they work through. So for that first 1990, okay, which I did make, I had $624,900. That's going to put me kind of right around there. Okay, so I'm going to pay all of this one, 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 and then part of that one. Okay, so I've got 19,900 times 0.1. Okay, because I'm just putting it in there. Okay, my next difference for this, for the 12% tax bracket, is going to be that $81,050 minus 19,901. So the kind of the difference of money inside this next bracket is going to be $61,149. All of that is going to be timed 0.12. Okay, the next bracket is going to be the entire amount of money between 172,750 and that 81,051. So I'm going to subtract those. So I got 81,051. The amount of money inside this bracket will be $91,699. Okay, all of that stuff is going to be taxed at 22%. Okay, the next one, because I have to do this next bracket, is going to be that 329,850 minus the 172,751. All that stuff is going to be at 157,099. All of that is going to get taxed at 24%, so 0.24. The next one, I'm still having to pay that entire next chunk of money, that next bracket. So I got 418,850 minus that 329,851. So my next chunk of money inside this bracket is going to be 88,999. All that's going to be times 32%. And then this one, this 35%, I do not have to go the entire amount of money because I only made 600. I say only because I made $624,900. So I'm going to take 624,900, and then I'm going to subtract that from the 418,851. So I'm going to subtract it from that number there. So the amount of money that I'm going to be paying inside this tax bracket is going to be $206,049. Again, I chose some huge dollar amounts. I don't think I'm ever going to have to worry about these tax brackets, but if that was the case, that's the way it'd work. Again, because I made this much money, I need to go through every one of those brackets to figure out what I'm going to have to pay, and it'll continue to add every single time. So I got the 10%, 12%, 22%, 24%, 32%, and then a little bit of the 35. So I've got 19,900 times the 10%. That'll give me $1,990. Next one, I've got 61,149 times the 0.12. That's going to tell me on this tax bracket, I've got 7,337.88. Okay. My next tax bracket is going to be 91,699 times 0.22. So in this tax bracket, I'm going to be paying $20,173.78. And the next one, I've got 157,099, all of that times 24%. So this one will be 37703.76. The next tax bracket, I've got 88,999 times 0.32. So in this tax bracket, I'm paying 28,479.68. And then my last tax bracket, the 206 and 49 times 0.35. All of that, I'm going to be paying $72,117.15 to figure out my total bill, all the stuff that I'm going to have to pay in taxes based on the amount of money I made. I'm going to add everything inside this column. So I'm putting it on my calculator right now, but I've got 1990 plus 7337.88 plus 20173.78 plus 37703.76 plus 28479.68 plus 72117.15. My total tax bill, the amount of money that I owe back to the government based on how much money I made, is going to be $167,802.25. So I gave you a really long one, but just know that as you go through, the amount of money you make is all going to be broken up into different brackets. So if you make a bunch of money, you're not having everything taxed at, let's say, the 30% or 32% or the 22%, but it's going to slowly kind of build up almost like stair steps. All right. All of the tax software you use will do this stuff for you. But if you want to understand and you need to understand where these dollar signs are actually coming from, this is the stuff that's happening. Okay. As for homework, it is a Friday. I'm not going to give you the packet. Your homework for the weekend is, if you're going to twerp, have fun. And if you're not, make good decisions, be nice to people, and I will see you guys next week. That's it. Bye.